Good morning, ladies and gentlemen. Hello, everyone, and welcome to this live trading webinar. Today is Monday, the 28th of November. Moving on towards the end of this interesting month, I can say. Guys, how is everyone doing today? If you kindly let me know, how do you feel? Is everything all right? Yes, fantastic. All righty. So, as usual, just to make sure you listen to the podcast, I uploaded last night, to be honest, so it's going to be easy for you to just listening right after we finish. In case you are new here and you don't know where to find the podcast, I will share the link with you. Here is the link, ladies and gents. You can download it on your device, or you can just press the play button from the website. Either way is fine. Just a reminder, in case you don't have your Admirals mobile application, you can download it from the App Store, from the Google Play. Especially now, you're not able to download, if you're a new trader, you cannot download the MT5 platform. And the disclaimer mentions that this content is for general information only, and it's not intended to provide any trading or investing advice or any personal recommendation. And let's move on. So what's the event happened today? It was only the retail sales in Australia, previously 0.6% for the month of September, that was. And for month of October, the forecast was 0.5%, dropped to minus 0.2%. Usually when we see this drop in retail sales in the country, Tashan, good morning. Good morning. I hope you are all so well. Thank you so much for asking. So we saw in the morning, if you had look at the charts, that Australian dollar got a bit weakened. So if you're holding trades against the dollar, that will be good. That will be good signal so far. Yeah. Then premium analytics, today's top headline: Chinese stocks drop as COVID protests intensify, cases surge. Oil prices face fresh volatility with new Russia sanctions, OPEC decision. Globalized supply chain brings more turbulence, food prices. Stocks are on the rise, but earnings could drag them down again. Adidas top executive discussed risk of staff direct exposure to Kenyan West years ago. Iran's top paramilitary commander warns protest in eastern province against unrest. Most power is destroyed in Kiev as Russia strikes hit southern Ukraine. And the last one, Bahamian Attorney General defends handling of FTX collapse. Okay. Hello, everyone. Hello, guys. Welcome to this Monday morning briefings webinar. Any interesting trade from someone last week, guys? For a reason, I don't see the MT5. Okay, here it is. Any interesting trades from someone? Jasper, Bunmi, HV, Teresa, Darshan, Raquel. Good morning, guys. Let's start with the dollar index. On the daily chart, that's the dollar index. So we bounced around this 200 moving average. After this, we said we do expect to see some push to the upside. The market, it looks like it struggles around here. Now, what can we do in this occasion? Usually the 200 moving average act as support on retracements like this one here. Now, can we trust this and initiate trading signals? Yes, why not? But the major trend is down and we don't have a double bottom. It's not itself a signal to initiate buying trades in a downtrend. The market, it's in a downtrend. Now, this double bottom can signal two things. Either it can become a descending triangle. That's a continuation pattern, and we can see the dollar moving lower, or it can break the neckline and it can consider as bullish pattern and at least to run this distance from here, from A to B. So we can come somewhere here, let's say, if the price is going to come up to there. But just right here in a downtrend to go against the prevailing trend because of the double bottom, it's not a high probability trade. Hi, Rumen, short on gas. Okay, we're going to have a look. And that's what I want you guys to understand. A double bottom, in an uptrend, it's a valid pattern to be traded. Okay, but if we're going to take trades against the prevailing trend because of the double bottom, better to check some divergence maybe from stochastic or RSI or other indicators you may use, or to put the volume ticks and see how much the volume change, or some unbalanced volume indicators. We're using technical analysis to see some strength coming in the market from the buyers. All right, so we need to validate a bit this double bottom if you are willing to trade US dollar to the upside. Okay, so for now I still see this the market, guys. I think at some point it's a misunderstanding of how the market constructs by many traders. That's what I experienced in my trading career. And that cost many traders the problem of understanding exactly in which phase of the market they are and what exactly they have to do at every time. And that caused frustration, that caused many losing trades, the one on top of the other. Many times wrong direction. The market is a part of three phases. Okay, it's three phases or three major trends. It's what we call the major trend. Depends on the time frame you are trading. Yeah, I'm going to talk about the daily chart. There is the major trend, there is the intermediate trend, and there is the minor trend. So the major trend, it's around 6 months, put it that way. So when you observe 6 months of data, you can determine in the futures, in the Forex market, the major trend. So in about May, June, we can see the major trend. So the major trend in this market, so if we forget this one, and here it's our major trend, the major trend is up. The market starts from here and it's here. So we have increase in the price. So we can say that the major trend is up. The intermediate trend, it's about anywhere between 1 month to 6 months, up to 6 months, put 1 month to 5 months. So the last 5 months for the intermediate trend, it's still, let's say, up. And then we have the minor trend. Minor trend, it's about a couple of weeks. So the couple of weeks, the trend is down. So the minor trend is in a downtrend, but the other two, it's, let's say, in an uptrend. But we have a very different occasion here. We see this major trend line broken to the downside, and that's a big signal for reversal. All right, because it has multiple touches, this major trend line. So after we broke the major trend line, we expect to see reversal in this trend now. First, we're gonna the minor trend it's gonna play, then the intermediate, and then of course the major trend, because we will need more data to determine these trends. So for now, we see that a broken of this major trend line support, it indicates that the market can either go sideways or the market can reverse. If the market was about to go sideways around the broken area, we shouldn't see this new low in the market. So this new low indicates that we start trending to the downside. Okay, that's a good approach to understand where you are in the trend and how can you trade and where to find trend. So after we identify that we want to be seller, we have to find the timing to execute. So which is the best timing? The best timing is either a candlestick pattern or a retest of a broken support can act as resistance, or a fib retracement area, or a combination of all this stuff. That's what we do here. We try to do the combination because it's a higher probability trade. All right, now if you are trading on the 4-hour chart, then your major trend, it's going to be, let's say, 2 months of data. The intermediate trend, it's going to be about 1 month, 2-3 weeks of data. 3-4 weeks of data, and then your minor trend, it's going to be just maximum 1 week. So that's the approach you use all the time. You identified what the big picture is telling us, you identified where is your minor trend and intermediate trend, and then you see how can you enter in the market like what we do here. All right, guys, so it's let me just delete some spams here. I'm sorry for that. Oh my God, these guys. Sorry, guys, it's just some people, they enter this webinar just to throw some spams and then they leave. So what can we, so why should we start buying the dollar just because we saw this double bottom? We have to first see where the force in the market is. Double bottom can temporarily pause the trend. When we can see that double bottom is valid and we can trade with the break of the neckline of the double bottom. Okay, unless we are trading in an uptrend and we see a double bottom in an uptrend, then it's a strong reversal pattern that this temporary, this correction has been and will be ending soon, and we can take a position earlier in the trade. Okay, but to take a position earlier just along this double bottom without considering any additional features like divergence or like volume indicators, it's a bit low risk. It's a bit low probability and higher risk. Okay, so I still stick with the bearishness of the dollar. On the DAX, we still have some room to retest this area. It's been a while. We are intrading the indices. If you understand that everybody acknowledged that it's been a while, the currencies, they are not trending, and we just stick to the indices. Yeah, we analyze them intensively. So on the 4-hour charts, any corrections on the 1-hour charts, on 5-minute charts, higher highs, higher lows, I'm looking to buy. Usually these gaps, they tend to be filled usually. So this gap here, if we're going to push higher, I can see the market at least retesting this middle area of the gap. I would like to see the market retest here, but to be more safe, I would say if I'm going to buy, I will target somewhere in the middle. I won't be that much aggressive because the trend is already in an extent. FTSE 100. We are still in this uptrend, although this trend line now is not in play because it's not been respected a lot. The market is just pushing to the upside, and that's what we want. It's been 3 trading days we stuck around this area. Dow Jones, we touched finally on Friday this area of resistance, so all long positions should be close at the least to the max, to the majority of the profits here. Okay, remember we were trading from this bullish engulfing, we were trading the Dow Jones to the upside on any time frame based on what time frame each one has available to trade. Nasdaq, after the retest of this high point, we just see the market moving sideways. Now, we are in the middle of this move. What can we do? We can wait for the market to give us some rejection, maybe around an area of support, and then we can still buying. Same with the S&P 500. We had this push from this support to the upside, although we talked about that and we mentioned that this is not that clear because yes, this rejection around this support happened just right at the top of this move. So if we enter here and we take profit there with a stop below, it's pretty much 1-to-1 or maybe less than 1-to-1. It's 550. It's 7. No, it's 1-to-1, a little bit more than 1-to-1. But I personally prefer, now we do have a tentative trend line. So we have 1-2 touches. I prefer to see the market touches this trend line along with this area of support. That's a strong combination. And then let's see if we have some fib retracement around here or there. So it's the 38.2%. But again, if the market is going to stop around here at the trend line and this support, then I'll definitely look to take another swing trading and target this level up there. And in regards to the currencies, let's start with the Great British Pound against the dollar. Well spotted by some traders here. The 200 EMA can definitely act as resistance, and it acted on Friday. It didn't let the price to move to the upside. Just excuse me. So what can we do? Expect? Is it because of this 200 moving average we're going to short? Probably not, because the dollar indicates weakness. So this we can see it push to the upside. And but right now we are in this impulse move. So what can we do on the intraday basis? If we go on the 5-minute chart, on 15-minute chart, and we clearly see the price create a new high at this area, then definitely we can start looking for intraday to push to the upside. Okay, I just want to clear first a higher high, and then I'm looking to get involved with that one. Same with the euro. We can see some strengthening coming in as well. If we're going to see a strong, a weak US dollar, definitely the Swiss franc, it's going to get strengthened. The US dollar, it's going to push to the downside. Australian dollar had some important fundamental weakness, and we don't know how much the Australian dollar it's gonna climb. If the Australian dollar is gonna climb, it's purely based on the US dollar weakness. Hello, Martin from Kenya. Thank you so much. The webinar is great. Really appreciate it, Martin, and welcome to the webinars. Now, this pattern here, ladies and gentlemen, on a daily chart is identified, or on any other time frame. Okay, this one here, it's identified, if we're going to stay above this support trend line, as ascending triangle pattern. Okay, we have 2 points here. If we're going to stay above this trend line, then we can see, in my opinion, we can definitely see a break out of this pattern. So traders are trading these patterns like ascending triangles in an uptrend. It's a good one. And the first price, the minimum price objective is it's the base distance from here to there. So from here to there, we have 200 pips. So from the broken area, if this is going to be the broken area, 200 pips, we are retesting this important level of resistance. And that's how you can see your trading. You can match your technical analysis with the levels in the market, and you have to trust this process. Okay. So in my opinion, some buy stop orders can be placed here if the market it's going to create this pattern. This is in the anticipation of the creation of the pattern, and then we can see the Aussie against the dollar coming all the way up here. More conservative way of playing this is wait for the break and hope for the retest. Sometimes if the break is strong, the retest back the correction, it doesn't take place sometimes. So and what professional traders we used to do, if we're going to enter here on the breakout, we make sure that we don't risk full amount in one trade. We can leave some for possible correction. Okay, because this is in an anticipation of the pattern. Veska Zidi, can I have access to previous and today recording webinar? Yes, definitely. I will show you on YouTube where you can access these webinars. Then, ladies and gentlemen, the Kiwi against the dollar, the increase last week, the interest rate. So Kiwi, it's one of the best performances I mentioned last week. And if you've listened to the podcast I've done last week, you should get many trades with Kiwi last week. And I hope you've done it. Okay. We had Kiwi Euro, we had Kiwi Canadian dollar, Kiwi Australian dollar, everything in favor of the Kiwi New Zealand. For those who don't know, Kiwi, it's the short name, it's the nickname of New Zealand dollar. So we have the New Zealand dollar against the US dollar. We are still looking for upwards momentum until we retest this area. For swing traders, the 4-hour chart usually on this type of trading works very good because you get high reward risk ratios. Now, what I was explaining earlier, we have on the 4-hour, we know that the daily chart is in an uptrend, and the 4-hour chart is creating this correction pattern. Within this correction pattern, we can draw a trend line. You see, we have valid points and we draw a trend line. When can we initiate long positions early using the 4-hour chart to go with the momentum of the daily chart? When this trend line first, when the price is going to come to an area of support, we want the price to come to an area of support. An area of support, it can be this one here, or if it's not going to stay here and it's going to break below, it can be the trend line here. Okay. So if we come up to this area of support, this trend line, if it hasn't broken before that, prior to that, so if the price is going to just drifting around like this, if we have a break here, then at the break, we can break and close on the 4-hour. We can definitely initiate a position here based on the market structure. Daily is up, 4-hour lower highs, lower lows finish with a break of the trend line. So if I enter here and I have my stop there, I can target that called swing trading, and I can go back to the daily chart and target either this high here or leave the trade to come and retest this area up there. Okay, that's called swing trading. When is the best timing to do swing trading? Only when the daily is trending. I'm talking about for traders that they use daily chart. If your higher time frame, it's the 4-hour chart, so you do swing trading only when the 4-hour chart trends. But unfortunately, the 4-hour chart gives many false signals if you have it as a higher time frame monitoring. Okay, so I suggest better stick with the daily chart to do your analysis, and you can execute on lower time frames. So daily chart is up. We can go to the 4-hour chart to find some nice entries, and we can make a good reward to risk out of that. So Kiwi on the watch list, USD Canadian dollar. This is in this minor downtrend. And here is the conflict, ladies and gentlemen. This is in the major trend is up. The intermediate trend is down. You can see the intermediate trend here. It's about more than 1 month. And then the minor trend is also down. So that's a bit of a conflict with this pair. But if someone doesn't do the analysis we do here, and we don't start from the leading indicator, from the leading currency, from the US dollar index, to understand what the dollar index is doing, what's the behavior of the dollar index, if we don't do that, we're going to find ourselves very confusing when we go to analyze directly the currency pairs, because this currency pair shows that US dollar can gain some strength, but we saw that US dollar, it's most likely a weak currency, so it can save us to stay out of bad trades. On Friday, we said that dollar yen expected to push to the downside, and I said if we're going to close below this support area because it's a strong support, then definitely we have this room to move all the way here. So we're going to be patient. The market can retest and give us some entries around here, or it can just keep pushing lower, and we're going to go to the 4-hour charts, 1-hour chart, 15 minutes, 1 minute, and so on to find some sales to sell all the way here. To get in and out depends. If you are swing trading and you find a good swing entry point, then you can hold up to this level. If not, then, and you are doing intraday, you just go in and out of the market. And because the time is running out, I would like to just mention few currency pairs. The one is the crude oil. Finally, we are breaking below this $75 mark. If we're going to close below, we can see some more push to come and reach as this 65, or even better, this $62 area. That's more preferable. So we know that we're going to trade to the downside. And Bitcoin is just following the dollar. The euro against the Canadian dollar, that was the pair I would like to mention. Here we have a development of an uptrend. I had the FIB here so I could see some retracement. This retracement didn't happen yet. At some point, we're definitely going to see some retracement, ladies and gentlemen. Trends, they just they don't just go in a straight line. They go in a zigzag mode. They go in a correction mode. So we're going to be patient and wait to see what the market is going to show us. Euro Oz, it's a bit messed up here on this support. The market made this inside candle here. That's an inverse hammer, inside inverse hammer. So it's a bullish signal, but really it's a bit messy here. I don't know if anyone traded to the upside. If you are, if you live in somewhere in Asia or Asian Pacific region, Australia, maybe you could enter here early in the morning if you've spotted. I didn't do anything. Very mixed picture for myself, my trading style. Hello, Rocky. Good morning. Zebs, your thoughts on pound, JPY, pound JPY. Let's have a look. Also, before I forget, the AN gas daily short on this one, perfect. Really good from resistance. The market came at this resistance, rejection. Then we had that inside candle. Some people, they shorted. Pound, why I don't see the pound? So it's still messy here. I don't see an intermediate trend or minor trend in a trending environment. It's just sideways. So by understanding, starting, where is your minor trend? Where is your intermediate and major trend? This is just sideways. It's not clear as it should be. So I don't have any bias here. The market can come here, can go, can give us lower highs, lower lows. Who knows? I don't have a trend line to put. Only this one that developed last week with this rejection. So we will see. Let's leave this trend line. We have a support, let's say here, a minor support. So we see what's going to happen. All right, ladies and gentlemen, that's all from me today. Before we finish, I promise to show you where to find the recording webinars. So just stay with me for a second. Let me share the screen with you guys. So which one is this? It's this one here. So ladies and gentlemen, you go to Admirals website and you can scroll down. Please make sure you subscribe if you haven't subscribed. So, and keep liking the videos we are putting. Lots of effort for all these videos. If you scroll down and you go to live trading, morning briefing show, and you're going to find here all the videos, guys. Okay. Also, for those who are new and you don't know, the Trading Spotlight, it's a recording webinars, live webinars, but the recordings are here. And I do series of trading psychology webinars, and I explain everything about trading psychology as much as I can in an hour. So please make the effort. Wherever you see trading psychology, thinking probabilities, it's a very relevant webinars, and you can watch them. All right. Thank you so much for your participation. I would like to wish to everyone to have a lovely time wherever you are in the world. Thanks for joining me today. I wish you happy trading. For those who are watching us through the Zoom, please make sure you give a feedback about what we do, how we do it, if you like it, if you want to see more, whatever you want, just leave a feedback. I will appreciate it. And I look forward to see you again tomorrow at the same time. Thank you so much. Bye-bye.